There is no doubt the economic situation has been one of the main drivers of the price action over the last few months, if not year. With the DXY falling down, we've seen stock markets take a little bit of a rally to the upside, but unfortunately Bitcoin being hit with that negative news of the FTX crash has seen a continuation downwards. The question is now, if the DXY continues downwards, will we see a reversal in Bitcoin? And if the DXY does find support and go upwards here, will we see a continuation downwards? Let's go ahead and find out. Okay, what is going on, MegaWhale team? Welcome back to the channel, guys. Thanks for tuning into today's video. It's great to see you all and hope you're all having a fantastic day. We're going to go ahead and talk about Bitcoin today and focus on the short term, the macro, and the economic data. If you've got any questions, leave them in the comment section below. Smash the subscribe button, hit that like button, of course, to support the channel, and join our Telegram channel. First link down below. Get access to all of our charts, updates, analysis, information, and so much more. You can go ahead and see it on screen over here. There's a lot to look at over here, and really highly recommend joining up on this channel. If you're of course interested in our trading signals, you can go ahead and access our VIP group over here. You can see a whole variety of different trading signals, analysis, updates, and so much more. All of our trading signals have specific entries, targets, stop losses, and obviously the risk is very well identified. And of course, you can join our group chat for our VIP when you get access to the VIP channel. Let's go ahead and start our data. So Bitcoin has seen 17.89% negative for November. It's gone up a little bit from yesterday. We saw a little bit of a rise, about a percent, 0.8% move upwards for Bitcoin in the last 24 hours. Not a lot of volatility, not a lot of price action there. Volatility has moved up around 0.01% from 4.09%, again indicating there's not a lot of movement in the volatility, and thus there's not a lot of movement in the price action. We're more or less in a point of indecision in the markets and kind of just pushing sideways, waiting to see what happens. And the liquidations do support that theory of indecision. You can see 64 million in 24-hour liquidations is actually on the lower side of liquidations for the market. Not a lot of price action here, not a lot of volatility, and of course, a period of indecision. So we do have a little bit more data to talk about, and that is of course the PPI. And we'll come back and talk about this later in the video, but essentially the producer price index calculates consumer price inflation for producers, so inflation on materials or anything producers need to produce their stuff that they sell to consumers. So generally when we see the PPI go down, we know that there's a leading indicator for potentially a CPI going down, as if the PPI goes up, producers have to then add those costs back and push those costs forward onto consumers, and then that results in CPI moving forward, or moving up, should I say. So seeing PPI go down is a good indication that inflation could potentially be dropping in the next CPI report. Again, it is bullish for the market. We did see it actually come in a little bit under forecasted and a lot under previous, for around 0.4%. So it is looking pretty good. And that is half the reason why the DXY has actually fallen a fair bit over here, guys. Generally, when we get bullish news on CPI, bullish news on PPI, we generally see the DXY fall, which we did see over here, as it's a leading indicator to what inflation is. And if we know inflation is moving down, we know that we don't need to hike these interest rates as aggressively, and therefore we see money flow out of this cash and into assets, and asset prices rise, DXY falls. So we're seeing the DXY fall a little bit, and it has fallen underneath the very major 106.6 support level. We're currently flirting around it, meaning we haven't quite lost it yet. We're kind of up and down. We haven't really made any significant move away from it. We're kind of hanging on to it by a thread still. We are slightly underneath it now, and it's a bad thing, guys. Of course, if DXY falls any lower over here, we are going to see a move down to around 103 to 104, and that is a major support for the DXY. Now, of course, as you already know, the DXY moves invertedly to the stock market and crypto. Generally, when we see the DXY move downwards, we see stocks move up, and we have seen that. Generally, when we see the DXY move, we see Bitcoin move in the opposite direction. Unfortunately, with the FTX crash, we've seen Bitcoin plummet. So there's a lot of external factors that have influenced Bitcoin's price action over the last couple of weeks, because if that didn't happen, I assume that it would have followed with the stock market slightly upwards. We actually could have seen it move upwards, but instead we did see that crash. Nevertheless, guys, let's take a look at the stock market. We have seen a rejection from the 34,000 level on the Dow Jones. Of course, the Dow Jones is looking considerably decent over here. This is a very major resistance level. If you take a look at the chart over here, we have that resistance over here. We have the resistance back in August. We have resistance back in May. We have support back in April. We have resistance back in March. We have support all the way back in I think it was February. So this level over here, this $34,000 level, is an incredibly strong resistance level. A resistance level that if we reject from, we're going to see a pretty nasty rejection all the way back to 32,000. If we do clear it, we do have that chance to push up to 35,400, and that 34,400 being 35,400 being that bear market resistance. Breaking through this sends us into a new potential macro uptrend. So it's looking pretty decent there above 34,000. Until then, I wouldn't be looking for anything there. S&P 500, similar position, but the resistance is at 4,000 psychological resistance. Same thing, guys. Pushing above here would give us a shot to retest this downward sloping resistance, which enables us to attempt to break upwards and again look pretty decent. But of course, anywhere between here and this downward sloping resistance can result in rejection that could send us lower. So very interesting as happens there. We are getting close to a flipping point for most of these markets, but not quite there yet. It's getting closer. It's looking decent. Bond yields have been dropping 2-year and 10-year. Of course, Bitcoin dominance has seen a little bit of move outwards of this negative of this 39.2 to 40.2 range, pushing around 40.35% now, claiming a little bit more dominance in the market, and that could potentially continue back up to around 41 to 41.4% over the next few days. Let's go ahead and take a look at the price action on the short term, and then we'll take a look at the macro, and then we'll do our analysis on the economic impacts on the price action. So the short term is looking okay. And the reason I say it's looking okay is because from a structural standpoint, it's been very choppy, but we have broken through that downward declining or this downward descending diagonal resistance, which you can see indicated by resistance on a few multiple points over here, here, and of course again over here. We have in the last 24 hours managed to break back above this resistance after a pretty nasty rejection from that $17,000 zone. We came all the way down to about 16,600, a little bit over 16,600, pretty nasty rejection, and faked out of this uptrending support line, retested, pushed back through 16,800. Well, now we're above 16,800 and below 17,000. So we are looking decent in terms of the macros in the short-term structure, but there hasn't been enough significant moves here to confirm any move, meaning we can definitely still fake out here and head back downwards. I'd be waiting for a clear of around 17,000, potentially on a 30-minute chart or even a 4-hour chart, to be confident any move upwards will occur. If that move upwards does occur, we can be looking at 17,300, and we can looking for anything really all the way up to about 18,200 as a max if that move does continue. And to the downside, guys, if we do reject and push back below 16,800, we're looking for these lower targets again. So 16,300, 16,200, 15,800, okay? Taking a look at the total cryptocurrency market cap, we can see a few things over here. We do have a new diagonal trend line, which I do want to show you, which is a diagonal trend line which we acted as resistance on, obviously at the top, which was developed. We had confirmation of resistance over here in April, and then we had that breakout not too long ago. This was like late October, early November, which resulted in that rally for Bitcoin. But of course, we called that as a fake out, and we crashed back down into support, okay? So we have developed a new support here, but this downward diagonal resistance is still now a resistance, a potential zone that we could be looking to retest over the next few days. That diagonal resistance lines up with this 840 billion, which is this lower end of the total cryptocurrency market cap, horizontal diagonal resistance zone, which is that horizontal part of this descending triangle. If the diagonal resistance can be retested over here, we can see Bitcoin potentially moving back up to around 17,900, 18,000 level if that occurs. If not, of course, we do get rejected here, we head back down. So the short term is looking very sketchy. It's looking choppy. Sideways price action always makes it a little bit harder to tell. We don't really see that direction. The trend strength isn't looking too amazing over here. All we've done now is break through that diagonal resistance. We've cleared the 16,800, but we're not getting in any strong indications of a move upwards as of yet. On a smaller time frame, we're pushing above our moving average, as you saw. We're pushing above our bull market support bands. On the slightly larger time frames, again, we are kind of flirting around that. But if we go up to around 4 hours, we can see it's not looking too amazing here for the 50 EMA. Is still massive resistors. We are above the bull market support band, but again, nothing is standing out too much. From a structural standpoint, on the smaller time frame, guys, if we go ahead and flip the chart, we can see we have actually broken through this diagonal over here. We have retested this diagonal for support and we could potentially come back down. But again, there's nothing saying if we can't claim 16,800 again, this can't be a fake out and a move upwards can commence again. So short term, not a lot to talk about today, guys. We'll have to update it tomorrow again. We'll talk about the developments tomorrow, go over it tomorrow. I think for the next 24 hours, we're not going to see anything significant play out. If we do see something significant play out, it's going to happen if we get that close above 17,000, potentially above 17,200. Otherwise, I think this short term chop could definitely continue. Let's go ahead and talk about the larger time frame. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So Bitcoin, like we said, has come through this low volume range over here on the VRPV. And we'll go ahead and zoom out so you can see it. There's low volume range on the VRPV, as you can see, okay? And something very interesting, we're starting to build up some peaks in this VRPV low volume range, indicating development of support, okay? The question is, will this support hold, or are we going to continue lower? And I think it's entirely dependent on what happens next in the economic situation. And I'm going to go ahead and talk about that now, because I think it's very relevant before we talk about the macro situation. So let's go ahead and zoom out. Okay, so ignore some of the stuff over here, but you can look at everything else over here. So as we saw right now, we had the PPI data come out positive. So PPI data came out around 8. It was forecasted to be 8.3 and the previous was 8.4. So it came out positive. That tells us CPI could potentially come out next quarter, or whenever it comes out next month, for the month before previous, is going to come out positive. It's going to come out good. Now, when CPI comes out good, it indicates inflation is coming down. If inflation is coming down, well, what that tells us, it can basically be a leading indicator for what inflation what interest rates are going to be. So if inflation comes out positive, okay, meaning inflation has been dropping, it could potentially be indicating that interest rates in the next hike are going to be less than what they were in the prior hike. And right now it's expected to be around 0.5 basis points, which is in line with that theory, okay? So the market generally moves towards a bullish side, trying to front run those rate hikes, okay? I'll give you an example. If the market expects interest rates to be 0.5, when last time it was 0.75, okay? And then when you get positive CPI data, meaning inflation is down, the reason why the price rises at that point is because perceived systematic risk being factors you can't control, interest rates, inflation, okay, monetary policies, tax policies, that systematic risk in the market has become more positive towards risk assets, meaning the risk return on your investments are now more favorable as interest rates are more likely to fall, okay? If interest rates fall down, interest on debt decreases, available cash flow increases. With available cash flow, people are more likely to acquire assets, whether it be straight out purchasing assets, which result in asset prices rise, or alternatively, take on debt to acquire assets to increase cash flows, which is what companies do. Companies acquire assets on debt. They use those assets to increase their future cash flows. Their future cash flows increase the value of their company, increases the share prices, ECT, okay? So generally when we see CPI start to fall, okay, inflation's topped out, whatever, okay, and we see interest rates start to fall, is an indication is basically leading data indicating that the economy is reversing and particularly the financial markets, will start to reverse. And I've been saying this for months, but I can't remember when I started talking about it. January maybe this year, we were saying we don't actually need to see inflation top out before we see the financial markets reverse. We will start to see the financial markets reverse the moment we get any inclination that interest rates have topped out. And that is what we're seeing. Unfortunately, with the Bitcoin situation, it's a very unique situation. We've seen CPI go down, right? We've seen inflation go down. We've seen indication interest rates are going to fall, okay, by the Fed. And we've seen the effect of that news on the DXY, meaning the DXY has started to fall, okay, which is the result of everything we just talked about above. But we have seen, unfortunately, we have seen Bitcoin continue downwards while the stock market has actually more or less continued upwards. And the reason behind that, again, it can be a little bit more complicated. And there's a lot of theories, but my theory is Bitcoin has moved down mainly because of two things. One, the structural formation of what we saw in the chart, which was its descending triangle formation. But more importantly, guys, I think the reason we moved down here was because of FTX crash. I think the FTX crash propelled Bitcoin downwards aggressively. Again, we did see an aggressive move. There's no doubt about this, guys. You know, we saw a breakout of this descending triangle over here, like bullish, okay? And then we saw a negative close to 30% move in like 2 days. Okay, this is no doubt that was a very aggressive move downwards, and I believe that was propelled by the FTX crash. So now it poses the question, has Bitcoin bottomed here? Will Bitcoin bottom here if the DXY continues down, or can we go lower? And this is a question that's very, very difficult to answer, particularly in a small video, but I'm going to try my best to give some sort of inclination or indication of how we can answer that video. So the first thing we need to do is we need to take a look at the price action, and we need to define points on the chart of which we could potentially bottom first and foremost. So, eliminating the VRPV, okay? Eliminating the VRPV. Pretending this drop didn't occur yet. The next logical support for Bitcoin is around 11, okay, to 13.9 thousand, okay? The reason being is because we have this huge support zone over here, and that is the next major support, okay? But this ignores the fact that we can't develop support, okay? Remember, at some point support is not existent. At some point support needs to turn into support. We need to create support. So identifying that and bring up the VRPV, we can already see peaks in the VRPV starting to develop, meaning we can see support levels are actually beginning to develop. That being said, guys, there is an indication that we could potentially be bottoming out sooner than later. And this could catch a lot of people by surprise because the technicals, okay? The technicals are suggesting that we go lower. There's no doubt about that. But the structure is starting to shift and say, look, we have support here. This could develop into support. Maybe this could be a potential bottom. The DXY continuing to fall with the interest rates going to 0.5, with inflation dropping. This could be it. Very, very interesting stuff, guys. It's very hard to say for sure. Again, this is all speculative. We'll have to wait and see. And of course, let me know down below what you think. Again, a lot of people are expecting 10K, 12K, 13K. I think it's a real possibility. But I think unless we lose this level, I don't think we're going to see those levels for now. I think there's a good chance that we are trying to at least develop some sort of bottom. I think a lot of this rests on what the stock market does and what the global economy does over the next few weeks. Again, very speculative, very hard to say for sure. Take it with a grain of salt. One thing I do want to bring up, however, is this chart. I'm going to go ahead and delete all of this for a second. We'll go ahead and draw our diagonal resistance in. It should be something like this. And if we go ahead and do our measured move from the absolute peak to the bottom, it's about negative 53%. And we take our breakdown point, which is over here, down to the bottom, negative 53%. You can see that the measured move has actually completed for the total cryptocurrency market cap. Not saying that this means it is the bottom, but it is saying that the measured move from the total cryptocurrency market cap right down the bull market has actually completed. Okay, it is actually completed. Guys, there's one more chart I did want to quickly talk about, and this chart is pretty contradictory to what we just talked about on the total cryptocurrency market cap. Particularly the statement that the measured move on the total cryptocurrency market cap from peak to breakdown point and breakdown point to bottom has been complete. If we do take a look at this chart, it does suggest a few different things. And that is, one, the date range trend between the absolute tops to bottoms is generally around 13 to 12 periods. And if we go ahead and take a look where we are now, we are actually in that 12th period. So generally we see 365 days to 396 days from peak to bottom. meaning we have anywhere between this period and next period to actually bottom according to that 4-year cycle, according to this date range trend. This is not really something I use too much. I generally don't really go off this much, as we have seen bottoms prior to reaching this actual trend line before. But what is very interesting in this scenario is the percentage drawdown towards this trend and where this trend lines up in terms of price. So we take our absolute peaks on these last cycles at bottom. We generally see around 83 to 85% drawdowns. That's pretty standard on these. If we take our peak from this one, what we have seen currently is around a 75. Now, if we do take this all the way down, it does actually retest this trend line at around 83%, which takes us to around 11.5K, which sits perfectly within this larger macro support level, which we're talking about down over here, which takes us to around this $12,000 zone. So if we do actually fail to hold the support level, that is another bit of information that can confirm the fact that we can potentially continue lower towards this level. If we do bottom out here, according to the 4-year cycle, in terms of date trend, it has validated. In terms of percentage drawdown, it has not validated. But again, we do not need to see the same percentage drawdown every single time. Keep this in mind, guys. An 83% move from here, a Bitcoin price of 1,150 towards a Bitcoin price of 160, although 85% is a larger drawdown than what would 75% be, this is a bigger bear market in terms of monetary displacement. There is more money in the market, and more money needs to leave the market to see that kind of drawdown from these prices in comparison to these. So as Bitcoin prices get higher and higher, the percentage drawdown we're going to see in bear markets are going to be smaller and smaller naturally, okay? This bear market has been incredibly bloody. Hundreds of billions of dollars wiped off traditional markets. It has probably been more money displaced in this bear market than the 2008 global financial crash. Just because the percentage drawdown wasn't as bad, the amount of money displaced is significant, okay? Keep that in mind, guys. Something interesting, and I'll see you in tomorrow's video. Cheers.